Hey, in this video, I'm going to be talking about some real examples for the market structure and market structure shift and the mistakes that people make in the market structure shift. So, first of all, we're going to be going over and taking a look at the mistake that people make when the market structure shift, identifying the market structure shift. So, this is the prime example of the mistake that people make, and this is the real chart example. So, as you can see right over here, so the price was creating higher highs, higher low, higher high, and then high low again, and there is no higher high forward to it, this higher low. So when this higher low gets broken, it's not going to be considered as the market structure shift. Neither this higher low is not going to be confirmed as a swing for the higher low, because whenever there is a retracement for the higher low, the price should at least retrace three opposite candles. Each of them should be breaking each other's low, and when the price has broke that level, so then it is going to be considered as the market structure shift. So as you can see right over here, this is the higher low, and whenever the higher high gets broken right over here, if the price would have gone like this, so if the price would have gone like this and then came back down to broke this, then we would have considered this as a market structure shift. But now there is no higher high forward to it, so this is not going to be considered as a market structure shift. Neither this is going to be considered as a market structure shift. So when the price is going to break this low, then this is going to be considered as a market structure shift. So this is a great example of market structure. So right now price is creating lower lows, lower high, lower low, lower high, and then there is another low low, and right over here as you can see there is another lower high after this higher low. So that means with this lower high, this higher low is confirmed. So whenever the price is gonna reach for this higher lower high, then we're gonna be considering this as a market structure shift. And also there is three candles opposite to it, opposite to the retracement, and each other candle is breaking previous candle's high. So it means this is a positive sign for our retracement, and this is gonna be confirmed as a market structure shift. So when the price is creating this type of market structure, then we are going to be confirming as a market structure. And as you can see right over here, the price was creating lower high, lower low, lower high, and then price break this market structure, and then comes back down to retest this level, and then goes back up, as you can see right over here. So let me go back and give you a little understanding of what has happened in this example. So as you can see right over here in this example, there is price creating lower highs, lower lows, low low, lower high, lower low, lower high, and then there's another lower low right over here, as you can see right over here. So there's another lower low, and this lower low is continued by this lower low right over here. So this is also going to be confirmed as a lower high. This lower high is only going to be confirmed when there is another lower low forward to it. So this is the lower low, and this low, previous low was broken by this low. So it means that this lower high is confirmed. So now when the price is going to break this lower high, then it is going to be considered as a market structure shift. So we can also write MEMSIS market structure shift right over here. So this is the market structure shift that has happened right over here. So after that, what do? We wait for the price to create. We have two options. We can either take an entry from the fair value gap, or we are going to be entering off of the Fibonacci retracement tool. So as you can see right over here, this was the example from a trade that we had. So in this example, I'm going to be telling you how and why we took this trade in the next video. So let's take another. So now let's take a look at another example of a market structure shift from another perspective. So That same day, this was another example for the market structure shift. So price was creating lower high, higher high, higher low, higher high, and then higher low, and then another high high, and this higher low was broken right over here. So this would be considered as a market structure shift, and we are going to be considering this as a market structure shift. So because there's three candles breaking each other's low in the retracement, and this higher low or this higher low is confirmed when the price has broke this low, this high, previous high was broken by this high. So when the price is going to be breaking this is going to be confirmed as a market structure shift. So then we can take a trade from this favorable gap or connect a Fibonacci retracement tool to take the trade. So these are the two examples from the live chart of the market structure and market structure shift.